Hello traders, Gary Wagner here. It is 1:40 in Honolulu, 7:40 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 14th day of March, 2025, and this is the evening report for gold and silver, our weekend review. Gold futures closed above $3,000 per ounce for the first time in history, marking an unprecedented milestone. Escalating global trade tensions, geopolitical uncertainties have created a perfect storm. What an impressive week, with gold trading lower on Monday to just below 2,900 and then picking up steam throughout the week on Tuesday, Wednesday, and Thursday. Today, opening and trading to the highest value ever, $3,017.10, and settling for the weekend at a historical milestone above $3,000 per ounce at $3,001.10. Traders, as you know, throughout the week we have been discussing where a primary third wave would conclude. Our assumption was that after gold had an A, B, C truncated correction, we began a primary third wave and plotted where we believe that wave would conclude using Fibonacci extensions based on a wave 1. Wave 1, as we are modeling it, began on the 18th of December with gold trading just above 2,600 to the former all-time record high at $2,968. We have also subdivided this primary first wave into the sub-count below it, meaning the primary first wave had an intermediate count of wave 1, 2, 3, 4, and 5. We took our primary wave and subdivided it into an intermediate count for two reasons. One, to show you the fractal nature of Elliott wave, but more importantly, to give us a concept of how we might break up the primary third wave that has just begun. Typically, we look for wave 3 to be as much as a 1.618 extension of wave 1, and we would then subdivide that to an intermediate count. We have just created multiple models of potential intermediate counts for this upcoming primary third wave. The longest one concludes with gold having a 1.618% extension of the primary first wave, and that would take gold to $3,445. The next model looks for gold going to a 1.382% Fibonacci extension of wave 1. That would conclude with gold trading to approximately $3,360. The most shallow model predicts a 1.23% extension of wave 1, taking gold to just over $3,300 per ounce. Realize that the models that we are looking at are based upon a move of the primary third wave prior to the benchmark wave completing, which means that once gold begins to move higher and completes the first leg of this rally, we will have a much more accurate model to get a potential price point where gold could conclude this upcoming primary third wave. And traders, that's what we'll begin to explore next week.
Of course, gold made history this week, breaching $3,000 an ounce for the first time, and stole the spotlight away from silver, which had its best week in 2025, gaining 4.4%, which is double the gains we saw in gold this week. We had been speaking about 3 levels of resistance that silver had to overcome before it could challenge the highs at 35.81. Those 3 levels are derived from these highs that came in spring of last year. We started out the week retesting this first level of resistance/support, and once we had confirmed that was support, we broke through the second level and yesterday the third level when silver gained approximately 75 cents in trading. Now it is only a matter of time before we test these multi-year highs, and only a matter of time before we test $40 in my opinion. The most important breakthrough that we had this week was made yesterday when we broke above this top here that represented many tops in silver's recent history. This level should now become support. I have just thrown up our major moving averages, and as you can see, on Thursday we also had a golden cross with the 50 and 100 day moving averages. Now we are in full bullish alignment. I think our most likely route forward would be a slight retracement to retest this support level on Monday or Tuesday before trading higher. As you can see, the wave count I have drawn in puts this fifth wave at a conclusion, and the reason for that, this third wave was an extended wave, and you typically don't get a fifth wave and a third wave extension in the same count. Let me show you what I mean by that. When we compare our first wave to our third wave, we can see that we reached a 1.618 Fibonacci extension of wave 1 in our third wave, which represents an extended third wave. So we are unlikely to see a 1.618% extension in our fifth wave. Instead, what we got was a 1-to-1 relationship of our third and fifth wave, which is one of the more common ratios between a third and fifth wave. While the headlines will most likely continue to favor gold, I believe silver will continue to be overshadowed by gold, but will start to gain attention, I believe, once it breaks these multi-year highs at 35.82, which I see happening as soon as next week.
This has been Gary Wagner,
And Joseph Wagner,
wishing you as always good trading.
we'll talk to you on Monday for our next video report.
Bye-bye.